In other news, economic data news, Japanese real wages down 2.8% year over year in October. Japanese real household spending down 4 to 5 to 6%, depending on which number you want to read. And now you're starting to see, because I guess the election back and forth started, and Darius has made this point, it's probably a layup that Abe wins his snap election, but it is not a layup that he gains a larger constituency that supports this. Don't forget that there are a lot of people in Japan that are rightly pissed off about this because they don't have wages. Does it sound familiar? There's 2/3 of Americans that don't have real wage growth either. They're under absolute real spending pressures. Again, the Wall Street Journal is running today a story. Literally, it's getting a lot of kind of fanfare, I guess, by the consensus media, but really? You're explaining something that we explained like 10 months ago. The consumer slowing in non-navel gazing terms is called 2/3 of the country that doesn't have real wages. It's called most of Japan. So again, if you want to engage in these policies, that's what you're going to get. That's what history has taught you. It is up to you to learn from history. And again, we would suggest that the risks associated with the historical devaluations and imposing these purchasing power pressures on human beings is really going to end in tears. So again, watch out for that in rate of change terms as we move forward. And then I guess that's probably it. It's a good spot to take some questions.
Absolutely, Keith. Just a couple this morning. First one. If 70% of the U.S. economy is consumer-driven, at what point does the decline in oil power consumer spending?
Well, ostensibly it was supposed to on Black Friday. I mean, the Black Friday, I guess it didn't power anybody to go to Kohl's or to go to JCPenney or to go whatever it is that you were supposed to do. You just didn't do it. Maybe you took the gas price savings, and I need to do a little math on this. I mean, I was asking my wife if we saved in the past week, if we saved $56 or what we actually saved. So how far does $56 go in today's day and age? I don't know. I mean, I can buy maybe half a Lego. Is that going to be the next U.S. boom? Is it going to be like the shale boom of? I mean, again. Take the pie chart, break it down. Median consumer in this country, 6.4% of their spending goes directly or is directly related to gas prices. 30% is their rent. 19 to 20% is food. Again, if you can tell me one restaurant, other than fast food restaurant, that can blow up your artery, again, apologies to my brother who runs a McDonald's, but again, you go to tell me any restaurant that is now giving you huge and massive and price cuts, and on the menu it says, due to low gas prices, we have cut our menu and wine prices today. I mean, seriously, if you live in the box that is Keynesian economics or Wall Street economics, you can only see so far, which is a little bit past your nose.
Yeah, not very far at all.